topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome. A great Monday morning. Hope everybody had a good weekend. Get something done around the house or the ranch or the farm or whatever you do with your weekends, family time, boating, whatever it may be. We got so much rain between Thursday, Friday, Saturday out at the ranch that we might as well have been boating. Pond was, new pond we had. We've been waiting for a lot of water. Well, we got excess water. It was overflowing. So we almost needed a canoe to get through the pastures and everything out there. But and the chickens we had, as I was telling our producer here, they became fish over the weekend, having to swim through ponding water. So I spent most of Sunday morning filling in the holes and replenishing the chicken runs and getting the chickens out of the water before they actually had to start learning to swim. So busy weekend, but we get to come back here and we get to talk about taxes. And today's episode, hey, we're talking about IRS installment agreements. You can pay your tax debt, and if you can afford to pay your tax debt in full today, man, I recommend you just pay it. Get rid of those penalties and interest that may be accruing on you. Get it done. Don't go into an installment agreement. Just pay the dreaded IRS off. I mean, when you owe money, they're going to put liens on your property, liens on any equipment you may have if you're owing money for your business. They're going to protect their interest in everything that you own. And when that becomes the case, it's kind of like putting handcuffs on you. I mean, you can't sell your house, you can't sell your business, you can't sell any assets because they have that lien on you. And if it becomes really, really bad, just like last week's episode, we were talking about levies and what they can take. Well, the IRS feels a need to protect. And that need to protect is putting those liens on or putting those levies on. So, if you do get into an installment agreement and all of a sudden you fail and you have money available, they're coming. The meanest, vicious collection agency in the world is who you're dealing with. So payment plans are a way out. Now, there are different types of payment plans and different things that the IRS allows you to do when you establish a payment plan with them. But, the first requirement they have is for you to be in compliance. Now, compliance to you and me and compliance to the IRS are two probably totally different things. So what does compliance mean? So we got to start from there. Compliance first means all tax returns are filed. So if you're missing one from, let's say, 24 or 2020 or 2019, they're going to say, hey, you need to file these tax returns before we'll offer you a payment plan. Now, if you haven't filed and maybe the IRS did a SFR, substitute for return. So if you haven't accepted it, they consider it to be not filed, but yet they're trying to collect tax on it. So you need to get that return filed. And filing that return may correct excess tax the IRS is trying to collect. So that's why, at Taxation Solutions, we go through and do a complete tax analysis to determine why the IRS is saying you owe this money, and why there may be returns that are not filed. Maybe you mailed it in and you filed it, but they haven't processed it yet. So we got to get it processed. We got to get that complete. So, people have to mail in returns if a return is older than 3 years. So right now we can electronically file 25s, 24s, and 23s. But anything before that has to be mailed in. And then it takes the IRS lots of time to process that manual return. I know the question goes and says all the time, well, why can't the IRS take these older returns electronically? They were accepting them way back then. For whatever reason, their system only takes the 3 years of taxes. So we just kind of grin and bear it and then wait for them to process. Now, what else does compliance mean? Well, the other part of compliance is that you've made your estimated tax payments. So if you have to pay or are required to pay estimated tax payments in, then you've got to be up to date for your estimated tax payments. Now, the logical question is how do you determine estimated tax payments? Well, the best way, and the way the IRS is going to look at it first and foremost, is based on your 2025 tax return. How much money did you have in tax for 2025? Less your normal withholding. So if you have W-2 pay, you would subtract it from your normal withholding from your taxes that are due. They would also subtract any ongoing credits you may have for child tax credits or something like that you may have out there. And so you can come down and say, hey, this is how much money that I would typically owe for the year, divided by 4. And then that would be your quarterly estimated tax payments. Now, quarterlies are made April 15th. If you miss that one, you got to make it up. June 15th. So we're coming up 7 days away from when the next estimated tax payment is due. So you got to make that estimated tax payment. Then you're considered current on your estimated tax payments. Now, I know you're curious, when's the next 2 quarterly payments due? Because the IRS had those weird quarters. It's only been 2 months, since the first one was due. The next one's going to be due September 15th, and then the last one's due January 15th. So you do get the 3 after that, but it goes, April 15th, 2 months later, June 15th is the next one. So you're coming up on that. Now, let's say you didn't file your 2025 tax return yet, and you didn't file an extension, you're not in compliance. Sorry. So you got to get that 2025 tax return filed. And if you did file the extension and you're going to file in October and you going to have a balance due, you better be ready to pay that balance come October 15th, because if you're not, any installment agreement you do today will be kicked out on October 15th. And you don't want that to happen either. So, we talk about, hey, being in compliance with the IRS under the IRS's rules. Now, if you had a downturn in business, the IRS will accept proof that your business is less this year versus prior. Or if your business is goes in cycles, and maybe the first quarter or two you're really low, but yet you're really big in the final quarter or the final half of the year, and that's the way your business usually goes. We can do estimates based on actuals, but we've got to have financial statements to prove where your business is at today and how it's performed to be able to get the estimated tax payments that are due. Hey, Becky, great question. What are these quarterly taxes for? What are we paying? Is this business or personal? This is all personal. This is estimated tax payments for 2026. So that when you file your 2026 return in April of next year, you have already prepaid all the taxes. Now, this is mainly for people that are operating businesses, or maybe you have a lot of investment income and you've got to pay estimated taxes because you're usually earning additional money. Or your withholding is never enough to cover the taxes that are due, and you need to make some estimated tax payments every quarter from there. But a lot of this comes down to people that are running small businesses or running businesses that, whether it's on Schedule C or whether it's a K1 coming over, this is all on the personal side. The only time you would pay estimated taxes for the business is if you were running a C Corp and you filed an 1120, and then the business would owe tax and it would have a requirement for some estimated tax payments as well. Hey, great question. And we love the questions that are coming in. Hey, now that we've kind of covered compliance and what you got to do to set up installment agreement as far as compliance goes, we're going to take a short break, and when we come back, we're going to start talking about the different types of installment agreements that you can get in. We'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking about installment agreements, being in compliance. And one of the things that we've been talking about in the first segment was being in compliance with estimated tax payments if you're required to make them. And again, estimated tax payments are mostly for people that are running businesses or have a lot of investment income that they're not having withholding that would cover their taxes due. When we were talking about this, one of the questions we had from Becky was, are these, for business or personal? And, when we're looking at estimated tax payments, these are all mostly on the personal side, unless you're running that C Corp. Now, if you are a W-2 employee, typically you're not going to be required to have estimated tax payments, unless maybe you have an outside business that you're running. Maybe you're just running a little side business and you have income that you're going to pay taxes on. You may have a requirement. Typically, your withholding on your W-2 paycheck should typically be enough to cover the taxes that you're going to pay, if not sometimes a little bit excess. However, it depends on how you filled out your W-4. And if you're married, how they filled out their W-4. Sometimes we've seen where there's not enough withholding on your W-2 paycheck because of the way those W-4s are filled out. They can get somewhat complicated when you're filling out the form. And when they do get complicated like that, then typically you see mistakes where you don't have enough withholdings to cover, and you should be making estimated tax payments. Or what you typically do when you see that this isn't enough, you go back to your employer, adjust your W-2 and the W-4 withholdings to have them withhold a little bit more money so that you don't have taxes due come April 15th. But the one thing I always recommend is that, get a good tax preparer who's going to go through some of this stuff with you, and, make sure that you've got your bases covered and you're not having more withholding than taxes that will probably be due. Last thing anybody really wants to do is pay the government in more money than they're going to owe. You should be keeping that money and earning the interest income off of that, although interest is relatively low. But if you put it in a nice investment account and even do a money market, you can earn 3% or 3.5%. One of those investment accounts and money market accounts, and that's better than not earning anything at all with it sitting at the IRS. So you might want to do that. Another question came in from Jansen. Hey, appreciate the questions. When do people running a business have to start with the taxes in quarters? And does this cover side hustle? So yes, you would cover your side hustle with this as well. So when you're doing your taxes, then you're going to see, what your taxes are and how much your withholdings are, and does it cover enough of your side hustle income. You can adjust your W-2 to cover your side hustle as well and not have to make quarterly estimated tax payments. But if you're running a business and you're going to have a net income, then you got to really sit down and consider making estimated tax payments. Now, remember, it's only going to be the required amount. So there's no penalties for not making estimated tax payments if there were none required. Now, that requirement comes in based off of your 2025 tax return for 2026. So whatever the tax is for that for 2025 is what they're going to be using to determine whether you have estimated tax payments. So maybe if you were a W-2 employee in 25, but you became self-employed in 2026, and maybe you're doing consulting and there's not a lot of expenses you're deducting and you're making good money, you would have to look at making your estimates off of the total amount of tax less any withholdings you may have, and that would be required estimates during 2026, being that you're starting out in the business. So kind of be prepared, for that when you're dealing with estimated tax payments and stuff. Chelsea asked, do businesses have those things like IRAs and 401ks? You can set up, if for your business, a solo 401k or a SEP plan, a simplified employee pension plan. If you have employees, everybody's got to be covered. So when you get those going and set up, we got some great investment people that we can refer you to that set those things up for you and go through the rules of what you got to do for your business and how you've got to offer that to any employees as well. All right, payment plans with the IRS. When you owe the IRS, again, like I said, if you can afford to pay them off, pay them off. Save the penalties, save the interest. Don't let that accrue any more than it has to. But if you can't afford, the IRS does payment plans. So, for you as an individual, having a payment plan, it can be really simple. And, if how much, depending on how much you owe, can depend on the difficulty of getting a payment plan. But no matter what you owe, if it's under $100,000, you can get into a short-term payment plan. So short-term payment plan is going to give you 180 days to pay the full balance. There's no setup fee by the IRS. There is no financials needed. It's just your word you're going to pay off the full balance in 6 months. And, they're not going to stop penalties. They're not going to stop interest. Those things are still going to accrue regardless that you're in a payment plan. Now, they're not going to issue a lien against you or anything else because you're saying, hey, you're going to full pay. Now, they may have already done it, and it took a long time to request this 180-day payment plan. But that being said, they're going to go ahead and give you that offer to be able to do it, and then you pay it off in that 6 months plus interest and penalties. But again, if you got the money, pay it today. If you need the time, take the time to do it. Maybe you got money sitting in investment accounts or someplace else, or you're trying to sell some property, or you're trying to get a second mortgage on your home, or maybe your home had no mortgage on it. You're trying to get a first mortgage to get this paid off. Use the 180 days to do it. And then as soon as you get that mortgage money in, pay it to the IRS and be done with them. It gets them off your back. It takes the stress out of your life. And it's a good way of simplifying life to make sure that, hey, you don't have to deal with the IRS and you're not looking over your shoulder going, oh my God, when's the IRS coming and taking everything I have out of my bank account? It's a great way to do it and be done with it, and you can go from there. We've helped many clients work through this and get them down the road to where they can pay this off in 180 days. But a lot of times you commit to that and that 180 days comes and goes, and now you're stuck with, hey, now we got to go to a payment plan. There usually no more extensions once you use up that whole 180 days. Every now and then we can get 30 days, 45-day extensions out there, depending on the situation. But the IRS kind of frowns upon the fact that you've already used that 180 days, and now we're at a mercy of them to get a payment plan in place. So kind of got to weigh the pros and cons in this. If you know it's going to take you more than 180 days to come up with the money to pay them off, then we start looking at variable and various payment plans that are out there. Most of them are going to be the long-term payment plans that the IRS will offer. So, we want to make sure that you're dotting your I's and you're crossing your T's, and we're getting everything in place. Now, one thing to note, accruing costs. When you set up a payment plan, it does not stop penalties or interest from growing on that unpaid balance. Now, typically, if you put it into one of these long-term payment plans, it's going to reduce your monthly failure to pay penalty, and it's going to reduce that in half. So it does come with some benefits out there, but we've got to deal with those things as they come up. Even when you get into a payment plan, they are going to apply any future tax refunds to your unpaid tax debt. So they are going to take any refunds you have coming from money from the IRS and apply it to your outstanding balance, which is kind of a good thing. You're not going to miss the money anyway because you've already paid it in. So they're not going to give it back. They're going to keep it and apply it towards your tax debt. And you do run a risk of default. So if you miss 2 consecutive payments, it can and generally does terminate your agreement, which then can lead to very severe collection actions such as wage garnishments, levies on your bank account, the whole works. So, hey, you got to be aware of those things. So, um, IRS does offer other payment plans. And, we can look at the different types of payment plans that the IRS is going to offer. And we had a question come in from Walter, and we're going to address that after this next break. But then we'll talk about also the other types of payment plans that the IRS is. We're going to talk about that right after this quick break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking about IRS installment agreements today and how you can get into an installment agreement and types of installment agreements that the IRS offers to you when you owe the IRS. Definitely not when the IRS owes you. They're just going to cut you a check whether they have the money or not. That just adds to the national debt because they owe you the money. They got to pay you the money. We're not talking about installment agreements where the IRS is paying you. But definitely when you owe the IRS money, you got choices. Hey, pay it off. Put it in an installment agreement, non-collectible status, offer and compromise. Different options that you have, but today we're talking about IRS installment agreements and stuff. Hey, Walter asked a question. Does our company handle the books for any type of company or just certain types? Walter, we handle the books for all types of businesses all around the country. We help people get out of tax debt all around the country in every single state. We even deal with people that are living outside the U.S. but have U.S. tax debt. We also deal with state tax debt, depending on what state you live in. There are a few states we don't represent people for state taxes, but we represent for federal taxes all across the country. We do have a sister company called Trucker Tax Tools that handles the books for truckers, owner and operators across the country. If you're a trucker, you can go to truckertaxtools.com. Trucker Tax Tools helps, like I said, owner operators all around the country with their books, with their taxes and everything else. Taxationsolutions.net. We help people, of course, with tax relief, but in process of doing that, we also help people with their books and with their taxes to help keep them out of debt and from having problems with the IRS. So, give us a call. Let us help you. Taxation Solutions number is 888-930-1016. Again, it's 888-930-1016. Let us talk to you about your company and what we can do for you to help you with your business and bookkeeping and taxes for your company. Matter of fact, we'll even go through and do a review with your company and make sure that you're set up the right way. Now, if you're an owner or operator, truck driver, you can call Trucker Tax Tools at 877-996-2477. Again, 877-996-2477. or go to truckertaxtools.com. We'll help you with your business as well there. Now we're talking about IRS installment agreements, and we've all heard, hey, IRS says I can get a fresh start. We heard on the radio programs, hey, the IRS has a new program called Fresh Start. It's fresh money. That's the way I look at it. They're freshly getting money from you. You call them up, and the first thing they want to do is put you into the streamlined installment agreement, which is available to you if you owe $50,000 or less. And that's combining your tax, interest, and penalties. And it allows you to set up a payment plan for up to 72 months without detailed financial information. So no 433A, no 433B. Matter of fact, you don't even have to fill out the 433D. You can call them up, and they're going to give you the max payment plan right there on the phone. 3 or 4 hours on the phone, but you'll be able to get that. Now, that does get the IRS off your back, but it's a full pay plan. Now, they're going to look at statute of limitations as well, because if your statute of limitations is maybe only 48 months, that's all they're going to give you to pay off this debt. Can you afford to do it? Do they care? No, they don't care. It's streamlined. It's like, put it into the computer. Here's what it says. Shoot it out. You're now paying $1,000 a month, and you go, but I can't afford to do it. Yes, you can. Per the IRS, you can. Or we got to go through all of this detailed information, and it's going to be very intrusive investigation. So you can agree to this, right? And you say yes, and then you default. You're back at square one. Matter of fact, you've made things probably worse because A, you may have given them information that they didn't need to have. You answer questions wrong. Or B, you agreed to this knowing full well you weren't going to be able to be in compliance. We just get done dealing with a client who has really got a revenue officer really mad because they have not managed to stay or be in compliance whatsoever, nor have they agreed. They agreed many a times with what the revenue officer wanted, but provided them zero nada information or payments. And now the revenue officer is in a very, very bad state. And it's going to take a lot to get him or her out of trouble. So just got to remember, when you're dealing with these people, their only objective is to get as much money out of you as possible. They say they're your friend. They say, I'm from the government and I'm here to help. And Ronald Reagan said it best, turn around and run fast. So, hey, when they're out there, they're not working for you. They work for the Department of Revenue. They don't work for you or I as a taxpayer. They have no allegiance to us as a taxpayer, only to their boss at the Department of Revenue. That's it. That is it. So you're sitting there looking at it and you're saying, hey, Mr. Fowler, there is no way I can afford to do this. I can't afford to be into this kind of installment agreement. Well, you do have options. And they're not necessarily going to disclose these to you. So you have an option to do a stepped payment plan to where, hey, I know my life situation right now just doesn't work. So let's start out paying, instead of that $1,000 a month, let's start out paying at $300 a month. And then the second year, let's go to $500 a month. And then the third year, we can go up to, whatever is required to pay off the tax debt, which may be $1,200. Now, you know full well that probably isn't going to work in your life either. But at least you get started doing this, and then we can come back to the table and change of the payment plan, or maybe we can change things in your life if we have to, that maybe you qualify for something different, maybe a partial pay installment agreement. Now, what does it take to get any of these things? It doesn't matter whether you owe $50,000 or $100,000 or $1 million. If you need to do a modified type installment agreement plan, or you are still going to do a full pay installment agreement, but you owe a large amount of money to the IRS, you're going to have to do a 433. And it can be A and B. A is if you're not running a business. 433B is for business. So if you are a person who is running a corporation, an S corp or LLC, or single member LLC reporting on a Schedule C, you're going to be possibly required to file that 433B for business. So you're going to have to disclose everything that you're making from your business. And then you'll also have to do 433A, which is a detailed financial statement of everything you've got, everything you own, all your assets. And you've got to report everything honestly, true, and correct. So there's no hiding property or avoiding something that you don't want to disclose today. And the IRS, if you're dealing with a revenue officer, can come in and require you to liquidate your investment accounts, or liquidate a retirement account, or even possibly sell property, even rental property and stuff like that. You've got to have some give and take, and you got to figure out what's going to be the best thing for you. If you don't want to sell property, then you got to come up with different solutions to it. But if the IRS sees the equity there and it's not your primary home, they could come back and say, no, we need and require you to sell this property, or we're going to take this property so that we will sell it and apply what's left to your tax debt. So you got to be aware of that. So you got to sit down and be able to do this analysis and then prove what you can afford to pay today to the IRS and in monthly payments. And once you do that, then the IRS can say yay or nay and approve an installment agreement. If you're dealing with a revenue officer, if the dollar amount's large enough, that revenue officer would have to go to their manager. So you got to be aware of the different options and tools available to you. We're going to take a quick break, and when we come back, we're going to talk more about that partial pay installment agreement and how that could possibly benefit you over the long term. And we'll do that right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. Talking IRS payment plans. Again, first thing you got to do is be in compliance. All tax returns filed, estimated tax payments for 2026 paid. That means you have, first one was due April 15th, your next one's due June 15th, and then October, and then January. So make sure you're going to be in compliance. Once you're in compliance, then you can file for an installment agreement. If you want to go with the full amount, you can even go to irs.gov and go into their payment tools and set up your own payment arrangement there, and you can get immediate approval. I've tried that for a few of our clients, and we continue to get rejects because sometimes the system just doesn't work the way it's supposed to work. So, you need to be aware of that as you're going through. So you can also call the IRS, 800-829-1040, and you sit on hold for 3 hours, speak to a representative, and they'll get you into a full pay installment agreement as quick as possible. But if you can't afford to pay the IRS, there is an option out there called a partial pay installment agreement. Now, what we do is we use this, especially when statute of limitations are coming up, and we need to stop the IRS from coming after everything you own. And we can prove to the IRS with the 433A and 433B, or maybe we just use the 433F, but usually they want the detailed one. We can prove to the IRS you can only afford to pay so much a month. So maybe you can only afford to pay $100 a month on debt that they want $1,000 a month, because they need that $1,000 to pay off certain debt before the statute of limitations run out. But you can only afford to pay the 100, and we could prove it to them. Well, then you can be set up on that payment plan for $100 a month. Now, that $100 a month will be for the term of the life of the debt. So it may pay off some of the newer debt over a span of 5 years or 72 months, so 6 years. But the other debt falls off along the way, which makes the $100 a month payment plan work over the 72 months. So as long as you make that $100 payment every month, certain tax debts will fall off as you go, because statute of limitations only runs for 10 years. So if right now you had tax debt from 2015 or even 14 or 13 or somewhere around there that had extensions on the statute of limitations, you may be seeing tax debt that's going to fall off here just in the coming months or over the next year or two, and may save you a ton of money of debt to the IRS by being in a partial pay installment agreement. Yes, over 2 years you pay $2,400, but that would pale in comparison to one of the clients we just did this for, and they had $20,000 worth of debt fall off in the first year, another $25,000 falling off in the second year, and then another $15,000 falling off in the third year. But by the end of the third year, they've only paid $3,600, and they saved almost $60,000 by having a partial pay installment agreement. So sometimes those partial pay installment agreements work. Now, what's the benefit versus, oh my gosh, the holy grail of resolution that you hear online of offer and compromise is, hey, over 7 years, 72 months, you pay $7,200 and you're done. As long as you're able to make those payments, all the total debt falls away except for the $7,200 you paid over the 72 months. Now, you probably save money because, one, you paid less to get this partial pay installment agreement. Two, you don't have to worry about compliance as much, because once debt falls off over the year, 2 years, 3 years, 4 years, whatever the time period is, if you then default, then guess what? All that debt does not come flooding back. It has been settled by statute of limitations. It's gone. So there was your benefit of being in a partial pay installment agreement. Whereas if you're in an offer and compromise and 4 years in, you default because you don't file a tax return, or you owe money on a tax return, or you didn't make proper estimated tax payments and now you owe and you can't afford to pay. All that tax debt came flooding back to you, and now you all owe everything that was settled, because statute of limitations in an offer and compromise cease to run while you're paying on that offer and compromise, and you have 100% compliance requirement. So what's the best? It depends on your situation. Sometimes offering compromise, sometimes non-collectible status, sometimes partial pay installment agreement. If you really want to know, hey, give us a call at 888-930-1016, Taxation Solutions, and we'll help you with your tax debt, help solve the problem, and get you the best settlement solution allowed by law for your situation. All right, we got some follow-up questions. Jansen is asking, do you need different bank accounts for each side hustle? So here's the thing, Jansen, it really just depends on how you're set up. If you set up different companies, different LLCs, yes, you do. If it's just one company with DBAs, no, you don't need necessarily separate bank accounts. But you could use them because it could help divide up and split and say, hey, this is how each segment of the business is doing, a little bit easier. But sometimes for most people that would get confusing. If you're running different LLCs, then yes, or different corporations, then yes, you need separate bank accounts for each one, separate employer identification number for each one, and then you go from there. Also, Jansen, you're asking, do you need bookkeeping for each side hustle? No, not necessarily. You might want to have different classes, and what we use is Xero software, and you'd be able to distinguish one business from the other to see how you're making money. And his last question was, do you need to file different taxes for each side hustle? If there are separate companies, separate LLCs, maybe recognized as S-corps or different incorporated businesses as S-corps, each corporation would file a separate return. If you're filing under your personal Schedule C, then no, you would not. It would all roll up into one. Now, if you're running two different entities, yes, then you would want two separate Schedule Cs, but it all gets filed with your personal. Jansen, you got some great questions. Your next question out here, we're going to have to address next week. We're talking about small businesses and what you need to do for your side hustles, when to make your side hustle a business, when to incorporate, when to make an LLC, and all that. We can discuss that next week because we're running a limited time here for this show this week. Great questions. You now established what next week's show is going to be about. It's all about your business, your side hustle, and what do you need to do for your business. Man, I appreciate the questions. This is a great show that we have that, man, this hour goes fast. I probably talk a little fast because I try to get so much information into these shows. But whatever you do, you got to be here every Monday at 10 a.m. Eastern time, right here in W4CY Radio. If you do miss an episode, we try to get everything up at iHeart, Spotify, all the different podcast sites, or just make it simple. Go to Tax Talk, the number 4, the letter U.com. Again, Tax Talk, the letter 4, or the number 4, letter U.com. And follow us over there. Never miss an episode so that you can catch up on everything that you miss. If maybe, hey, you weren't available to listen today. And then tell your friends about it. Man, we like to get information out to help people, whether it's bookkeeping for your business, whether it's taxes for your business, for your personal. How can you save money on taxes? What do you need to do when you owe the IRS money, and getting the right solution in place for you, for yourself, for maybe your business, the whole works. So that's what we're here to do, and answer your questions. So when you tune in and you have a question, send us the question. Let us help you. Hey, but whatever you do, you tune in every Monday, 10 a.m. Eastern time on W4CY Radio. And listen here, have a God-blessed and glorious week. Enjoy the week that God has given us. Do the things that you love to do and spend the time with your family. And then give God the glory for everything that you have and everything that you have done for the week. God bless you. We'll see you next week, 10 a.m. Eastern time, right here at W4CY Radio.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners and truckers. Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.